All right, let's get a check on some. In fact, we're taking stock right now. We did the Johannesburg Stock Exchange. We're doing that today. We did SGX yesterday. We did gold, oil, the Q1 performance this year. But now let's get a check on the JSE. Joining me now is Makwe Masilela as the Chief Investment Officer, Makwe Fund Managers. Joining me from Johannesburg. Great to have you on the show.
Thanks, guys.
Fantastic. So let's take stock now. The Johannesburg Stock Exchange Q1 performance. How did you see, investor sentiment and stock performance?
Investor sentiments continue to be uncertainty. Markets continue to be very volatile, all for the reasons that are also affecting global markets and also our peers back home here in the continent because of what we mentioned in our intro when we were talking about the oil, that it has also been a question of we've been worried about oil prices, and we did badly wiped up all the gains that we had for 2026, and at some point we even got into correction territories. And if you look, we just wiped off in 3 trillion rands that was wiped off for the month of March only.
Yeah, it seems the month of March, you know what they say about March, beware the Ides of March, and that played out really in most markets. And looking at the most capitalized stocks, they did pretty well. The likes of Anglo Gold, Ashanti, 21.2% for the first quarter. Goldfields, that did about 5.7%. Naspers, Standard Bank Group. But I see it's more of the mining companies there that are most capitalized. So I guess if the metals market goes down, the JSE goes down.
Definitely. And also you mentioned our industrial stock, which is Naspers, that managed to benefit, from a weaker rand. But yes, because it's more of a rand hedge, the guys are selling in dollars, but they are doing their cost in rands. But the month of March, I think, is the one that twisted the whole quarter performance. I mean, we started the year, on a front foot. We were also expecting that we'll start getting some interest rate cuts, and it was not only us, but also the global economies were expecting that. But when the fight started, or the war started in Iran, 28th of February or so. So basically, when we started and opened the trade on the 2nd of March, that's when we started reacting to the attacks that happened over that weekend. So that's when volatility kicked in. And you can even see with central bankers, you even mentioned the likes of Tanzania, they were also playing a wait and see, because people are saying, yes, this whole thing might be inflationary because of high oil prices. And if that happens, then that will unfortunately rise the cost of living, and then affordability will be an issue. Economies will continue to struggle, and then governments will also start collecting less when it comes to taxes, because companies won't be making the right profits. Other people might even get to extent that they get to be retrenched. Then also the government, as a way of collecting tax, as pay as you earn, gets to be reduced. So it just has been an unfortunate story. And as we thought that at least things are starting to de-escalate, we had last night Donald Trump, when he was addressing the nation in the US, the guy said clearly the next coming 2-3 weeks, they're going to attack Iran very hard. And when we thought the guy is happy to move away from the fight, even without having a deal, that is the deal that concerns the Strait of Hormuz. So it has been a question of volatility, and hence maybe even today, we're just having a bad day, and that also applies to global economies. So the issue here is uncertainty and the possible impact of the war, especially when it comes to inflation. As we know, that is a monster. No one will appreciate to have high inflation, because all it means is that our cost of living is going high.
And seeing how the second quarter is starting off, we're already hearing comments from President Trump. That's already impacting markets now. Oil is up big. Metals are down again. How are you advising your clients in this Q2?
Where there's an opportunity for you to take profits, I'll advise take profits, sit on cash, and then maybe you can get an opportunity to start buying the dips as the stocks continue to go down. Because, as much as the guys will probably be attacking Iran, Iran as well will retaliate. So you don't know where this whole thing will end up. So up until maybe we get some form of certainty that this thing is really going on or is it stopping, then I think maybe you can start putting money, because does not mean if there's war you cannot buy stocks. There are stocks that you'll be able to benefit when there's conflicts like that. Then probably you might have to look into that. But you just need some form of certainty, whether it goes to the left or to the right, then you'll be able to apply your mind.
Exactly. Any form of certainty now, I guess investors will take that. Thank you so much. It was great having you. Makwe Masilela is a Chief Investment Officer, Makwe Fund Managers. Thank you for coming on today.
Pleasure.